Welcome to the latest Evershed Sutherland Legal Insights podcast.
Hello, I'm Matthew Allen, Global Head of Financial Services at Evershed Sutherland. Welcome to the latest in a series of podcasts exploring trends and opportunities in global financial markets during 2025. In this series, we'll be hearing from our clients and industry observers on a particular hot topic issue, which our own subject matter experts on both sides of the Atlantic then reflect on in a sister podcast. Today, we're going to be looking at what's happening in the real asset private capital space. And to help us do this, I'm delighted to be joined by Gautam Huded, who serves as General Counsel of Brookfield Properties North American Logistics business. Gautam, welcome. Thanks very much indeed for joining us today and for taking the time. We really appreciate it. It'd be helpful maybe for the listeners if you could start by telling us a little bit about your personal background and your roles and responsibilities at Brookfield Properties.
Yeah, happy to. Thank you, Matthew. Really happy to be here today. As you said, I'm the General Counsel and Executive Vice President of Brookfield Properties North American Logistics business. I came to Brookfield about 5 years ago at the very outset of the pandemic. I came from Evershed Sutherland, where my background was in real estate development and investment structuring primarily, but I did a wide variety of things within the real estate department. Brookfield is one of the world's largest alternative asset managers. We're invested at Brookfield across private equity, credit, insurance, renewables, infrastructure, and real estate, which is my world. And Brookfield Properties, where I sit, is the operations and development arm for the Brookfield real estate platform. My role includes both overseeing our legal department as well as our development operations, which is an active pipeline of over 28 million square feet across global gateway markets and regional growth markets in the United States and Canada. And my role really blends management with strategy. I'm looking always to ensure that our teams are integrated and positioned for growth across both our development operations and our legal and risk strategy. Risk for us includes not just risk, but also safety, sustainability, insurance, compliance, and of course, legal.
And so just sort of stepping back and a bit of a helicopter view, what are the current forces that are shaping logistics real estate at the moment, especially in North America?
Yeah, well, real estate as a whole is emerging from a very interesting time over the last 5 years, which coincides with my time here in Brookfield. All the different sectors in real estate have responded to the pandemic in different ways, and I think we've seen retail and office sectors transformed. We've seen a demand for housing product, and logistics has continued to explode. But real estate is famously cyclical, and over the last 2 years, we've seen a pretty typical down cycle following that pandemic-driven boom in logistics real estate demand. So what we're seeing is fairly normal, but it's unusual for those of us in the logistics space because for the last generation or two, last 1 or 2 cycles, logistics has really emerged as one of the institutional asset groups after having been a fairly sleepy place in real estate investment for most of its history. So it's seen rapid growth over the last 10, 15 years, and now we're experiencing a fairly typical down cycle period. And that's normal. But it's for us in the real estate world, we have to not just know that we're in a cycle and recognize it, but understand how to read and understand and identify where we are on that cycle. And I read a few years ago a very interesting book on systems thinking. It was called Thinking in Systems by Donella Meadows. And one of the takeaways for me from that book is that systems change is inherently nonlinear. So as you change a system, there's always a lag time from when the change is being made to the results being realized. And so systems always tend to move, therefore, in an oscillating fashion. So things overcorrect in one direction and then another, and you sort of wind your ways towards the desired end state, or maybe a non-desired end state. And that's typically what I think you see often in these real estate cycles as well. It's not a linear line or not a clean circular path around the cycle. It's going to oscillate. It's going to take some twists and turns, and it's very disorienting if you're within that. And there's a human element too, where if you're on a winding path instead of a straight one, at any moment it feels like you're not actually going the direction that your compass is trying to send you. So you have to be able to look past all of that noise and look at the fundamentals of what's happening in the market that you're in. And so in the logistics market specifically, we continue to see very strong fundamentals. I'll talk a little bit about the demand side first. There's really three things to highlight. The biggest and most important one by far is e-commerce. E-commerce continues to drive the logistics sector. It's continued to grow at a 12% compound annual growth rate over the last 15 years. So that's about a 550% increase from approximately 258 billion to 1.4 trillion, again, over a 15-year time period. And really interesting is that 1 billion in online sales requires about 1.2 million square feet of space in our sector, compared to about 334,000 square feet for brick and mortar. So as e-commerce grows, so does warehouse demand, which is not necessarily obvious, but it really does drive warehouse growth. And that's consistent with the larger theme you see in real estate, which is the digitalization of the economy and the movement towards real estate that serves that digital economy. And that obviously includes data centers, but it also will include the logistics infrastructure for the movement of goods in the supply chain. The second factor is onshoring and nearshoring. So we've seen domestic manufacturing quadruple since pre-pandemic, and we continue to see growth there and expect to see more growth for a variety of reasons. And both nearshoring and onshoring create downstream demand for inland warehousing and distribution. So this is still a pretty modest impact compared to import and things that drive demand more uniformly. Onshoring and nearshoring is going to create pockets of localized and market-specific demand, and it's going to move some opportunities away from those big port markets where goods are being imported into more inland destinations where there's a manufacturing base that's popping up and an economy that's being built around that. And the third thing on the demand side that's continuing to create activity for us is actually tariffs and trade volatility. So the volatility itself of trade policy has been disruptive. We've seen a lot of uncertainty in corporate decision making, which has a tendency to slow leasing activity, which is really the engine of growth for all real estate, but especially for logistics. But it's also spurred some activity, even though there is that uncertainty about what the trade policy is going to look like over the long term. We've seen a lot of increased activity at the ports of LA and Long Beach, for example. They processed in the last reported month, which, as the recording of this, was July 2025. They processed over 1 million TEUs, or 20-foot equivalent units. That's a historic high, and that's largely due to importers rushing to get product in ahead of tariff hikes. So it's still to be seen how durable those port volumes will be and how that will translate into logistics demand. Historically, port volumes translate very closely to logistics demand, and if that port volume increase continues, it stands to reason that we'll see that show up in the warehouse demand as well. On the supply side, industrial vacancy remains healthy at 6.5%. That's very good, even though it's a little higher than what we saw at the peaks, of course. But modern logistics, which means product built after 1990, typically with modern specs, that sits at a higher 10.4%. That reflects historic supply waves from the pandemic era peak. So we obviously a lot of building and logistics product from 2020 to 2022 or so, and a lot of that product is not yet to be sufficiently absorbed, and you're seeing increased vacancy as a result. But again, I go back to that winding path that overcorrects in one direction or another, because now we're seeing sharp reductions in future supply. Development pipeline is down 66% from peak. Deliveries of completed product are down 50% year over year. And we're seeing other constraints on logistics development continue to tighten. So I mentioned data centers. The data centers boom is really competing with logistics space for land, which is taking some supply out of the market. And then entitlement headwinds are becoming more formalized through public policy. California passed AB 98, which is a landmark law that is expected to sharply limit the development of new warehouses in California. And we've seen development moratoriums in local jurisdictions across our key markets. So as those constraints on further future development tighten, and as market-driven factors slow down supply, we think there's some opportunity coming here on the supply side as well. All this is setting stage for more absorption, healthier rent growth in the years to come. But I do think it's of note that tightening of supply also creates some opportunities, especially in development space. And as I said, I do oversee the development operations for our group. Responsible developers are going to have a real chance to shine, I think, in the future of the logistics space. It was a market, again, that was not historically as institutional. So there have been a lot of people playing in that market. Now, as it institutionalizes, there's more of a focus on quality, more of a focus on safety, sustainability, and that's really what we focus on at Brookfield Properties. So we've long prided ourselves on developing high quality products and industry leading sustainability features. So all of our new buildings, for example, are at a minimum LEED certified. And this tougher development environment forces us to lean into a lot of our differentiating factors, one of which is creativity. So we are always looking for creative ways to create opportunities that are a win-win-win if possible. And I think a great example of that is brownfield redevelopment. We've redeveloped hundreds of acres of brownfield, including EPA Superfund sites, and those have their own legal and regulatory complexities. And it becomes increasingly important, especially in these port-centric markets. I mentioned development moratoriums and AB 98. You have communities that feel overburdened by explosive warehouse growth since the Great Financial Crisis and over this last generation or two of warehouse development. But there's still obviously a need to address demand for supply chain solutions. So there's going to be a need to address that market. And one way you could solve both is taking these heavier industrial sites and redeveloping them for lighter impact uses like warehousing, distribution. It feels like a long time ago, but the EPA was only created in 1970. Clean Air Act was 1970. CERCLA, which is the Superfund law, was 1980. And so there's a lot of heavy manufacturing industrial sites in this country that were operating prior to that regulation that need to be remediated. And rather than shy away from these sites, it's too risky. Like I said, we try to lean into our differentiators as creativity, and we try to find ways to take those environmentally challenging sites, assess and manage the risk, and develop lighter use ground up projects. And when you do it, like I said, it's a win-win-win. It makes financial sense for our investors, it helps policymakers, regulators achieve their goals, and it improves the economic and the environmental conditions for that local community.
Incredibly comprehensive review. Thank you for that. An absolute tour de force and huge amount to digest and reflect on for me and for our listeners. Just then take us from there in terms of those market trends and how that's impacting capital flows in terms of the business.
Yeah, so I'll start with some stats. So transactions are modestly down year over year, 99 billion last year, 2024. We're on track for 94 billion this year. A pretty modest decrease, but still a decrease. Still private investors making up the bulk of trades in the capital markets. Institutional and REIT players are selectively re-engaging. The trades are more focused on single asset sales and portfolios, although there are some big portfolios that have traded or are trading, including ones that we've acquired. And that debt is still a bit limited. It comes often from non-traditional sources. Banks are only making up 24%, life cos 23%, so non-traditional lenders are filling the gaps. So what I read from all that is this picture of a capital environment that is very slowly reemerging from the down cycle. Still very hesitant, but it is emerging. And it's really, I think, waiting on absorption and leasing to take off. I mentioned the lag times earlier when you're thinking about a cycle, and it's important to remember that different parts of the cycle, different parts of the market have different lag times, and not everyone is situated at the same part of the cycle. So you could expect capital markets activity to lag leasing and absorption a bit. And I think once vacancy comes down in that modern logistics segment, you start to see some absorption, then you're going to see the full capital markets liquidity cycle back around pretty shortly thereafter. And the reason I think that it's going to be the case is the fundamentals do seem to be in place for both equity and debt. Everything is there. It's just a matter of the final puzzle piece, which is really leasing activity taking off, absorption taking off, vacancies coming down, and then there'll be a lot more confidence to invest and to lend into that market.
And I just wanted to take you back, Gautam, to a theme that you were touching on in your remarks earlier around risk management and how that, as I interpreted your comments, that that's a key component in terms of driving better business strategies and a way that sort of brings both the legal and the development side together. What's next in terms of, if I've interpreted that right, sorry, what's next for you in terms of that focus on risk management?
Yeah, where I'm focused right now on that is probably mostly on data, which is primarily how we organize it and use it. And I think, especially for a legal audience, we can think of all kinds of challenges with data that present legal and regulatory concerns. So data privacy, protection, security, and all that is very important and a driving factor in why we're trying to be as sharp around data as we can. But it's also really foundational for using AI effectively. And we talked about the digitalization of the economy. We're no exception. We need to be able to use those tools effectively in our business, and having well-organized integrated data is important to that. But I think it's also really important for high-performing teams to share and leverage knowledge and experience. So stepping back and talking about risk is really important for investment. It's the engine of opportunity, I think. If something is inherently without risk, your opportunity to make money on it is going to be very limited. But when you find an opportunity that has some inherent risk, some meaningful inherent risk, and you find ways to address that risk, and it could be through analysis, mitigation, insurance, risk transfer, whatever tools you have, then you're not just reducing that risk, you're unlocking the opportunity. And I already touched on this a little bit on the environmental side, where you have environmental risk, but if you're smart about how to assess and evaluate and mitigate that risk, you can unlock opportunities. And those opportunities are not just for us and our investors, but also hopefully for the communities and the regulators who want to see those sites cleaned up. So I try not to think about risk as primarily defensive, because I think it really can be a tool for creating value and opportunity. And one way that plays out, I think, is really focusing on efficient processes and high-performing teams. And that's something I try to do in my role with both the development and legal sides, is take as much inherent risk out of the process by making sure our teams are sharing information well, performing collaboratively, and achieving what they need to achieve. And if you do that, and you have well-performing teams, I think that takes a lot of process risk out. And really, data and information is going to be the key to that, I think.
Incredibly helpful, and again, thought-provoking. I could sit here and chat with you all afternoon, but I'm going to have to wind it up, unfortunately. But before I do, I don't know if there's anything else you wanted to say by way of closing remarks.
Yeah, I think we're in a really interesting part of the cycle right now, and it's going to be there's going to be some divergence in outcomes, where the groups that have the best advice, the best counsel, the best thought around risk and strategy are going to see outsized opportunity and results, and the groups that have been kind of just making a bet on the market as a whole are going to see more divergent results. So I think this is the time where you're going to see some quality come through in terms of how well informed investors are, and operators, how well organized, how well counseled. And so it's really a great time to be building and leveraging our networks and our resources. So I really appreciate that chance to have this conversation with you and keep pushing that forward.
Well, the pleasure has been all ours. Thank you, Gautam, for joining us today and for your really incredibly rich and helpful insights. And of course, thanks to you, the listeners, as always, for joining us. If you're an LP or an alternative investor and you'd like to know more about Brookfield Properties, or indeed how they can help you tap into the logistics investment market, I doubt there's anybody in North America, if not the globe, that knows more about this market than Gautam, based on your remarks today. Thank you for that. Please do let us know, and we'd be very happy to make that introduction to Gautam and the Brookfield team, who are doing a phenomenal job. Please also look out for the next podcast in this series, by way of reminder, where some of the Evershed Sutherland partners will reflect on what Gautam has shared with us today to give their own perspectives. That will appear on all our usual social media channels in the very near future. Thank you.
Thank you.
Thank you for listening to the Evershed Sutherland Legal Insights podcast.